Hello smart money traders, welcome back here. I've gotten a lot of questions from you guys asking me to make a video explaining what is inducement. So I'm responding to these questions in this particular video. I'm going to go into the very basic of what exactly is inducement and how to spot them on your chart so that you will not get caught in inducement. So let's go into explaining what exactly is inducement. Inducement and liquidity works hand in hand, even though they are not exactly the same, but they work very similar. So what exactly is inducement? Inducement is basically what I call deception, because that is exactly what it is. Every time you come to the financial market, whether you're trading crypto, forex, or you're trading stocks, you must understand that you are in an open battle with some of the brightest minds in the financial market, and that is why you need to stay up your game and stay very alerted. Now, inducement is basically a deceptive area where most traders believe it is the right time for me to take trade, and then all of a sudden after you've entered trade, you find out that you get stopped out. So these are areas we can find on our chart time and again. They happen and they get repeated every time your price creating something like this. Okay, now this is an example of what inducement basically means. Then you see something like this. Now when you see price behaved like this and then had a sudden push below this level, can you see these equal lows that were created, push below it and reached out for this POI? This POI, probably this may be an order block that you are visibly seeing after a break of structure around this area. Okay, now when you see this happen and then people that began to take their trades here, they got stopped out around here, because somebody that is taking trade from here is basically putting his stop loss right below here. You might be used as a liquidity. So you're taking trade from inducement and then price actually got you stopped out before reaching out to this POI and then moving up to the right place that you actually predicted. So these areas, we call them inducement. This area that you probably have taken trade, probably from here, we call them inducement. And then below them is where your liquidity is residing. What exactly is liquidity? Liquidity is basically money. Everyone that is coming to the market, let's say somebody that is taking trade from here, if you are an order block trader, you have probably entered trade around this area. This area, you're going for the buy and then your stop loss is right here. If you are taking a buy order, if you buy anything to get rid of it, what do? You sell it. And that is exactly what your stop loss is. If you buy an orange, if you want to get rid of it, you can actually sell it. So your stop loss for a buy order is basically a sell order. So that is why whenever you see price reached out for your stop loss below, it is actually trying to buy from you, because you are selling. At this point you are buying, but right here it is a sell. Your stop loss is a sell. So when you see inducement happen, is because most of these guys that enter trade from here, their stop loss is here, and then smart money is reaching out to buy from them, reach out to this area and then moving up to that place. Not only do you see this kind of model, you can even see different model than this. Let me show you that, and we can go back to our chart to see what we can find on our chart. You can see something like this happen too. When you see price behaved like this, then you see something like this, and all of a sudden price reached out to this area. Okay, so these are all the ways that inducement happen. This area is our POI, that is point of interest. You can see these kind of movements happen, inducement happen. If we go back to our chart, you're going to see them, and then we're going to spot them on our own. Now I have some few that are right here after this change of character that happened here. Let me show you that change of character that happened here. Price actually came down to this place. Can you see? As price pushed, it even had a break of structure at this point. So most people that are taking trade, okay, break of structure at this point. Let me just identify that for you. Somebody have entered trade around this supply area, this area. Okay, this guy have entered trade here, even had another break of structure, happily waiting for the trade to move in their direction, and then all of a sudden price actually move out. This is an inducement. Okay, this area is an inducement, because you can see liquidity residing right above this area. Inducement happened, reached out to this mitigation block. Okay, reached out to this mitigation block that we are seeing up there. Price actually pushed above that place and then even reached out for this this other block that is above that place. So these people were used as liquidity, and then they actually entered trade around this inducement. This is what we call an inducement. You can see this time and again happening on the chart. I just want to be very brief explaining this for you. Now look at another one right here. After a change of character at this point that we can literally see with our eyes, change of character, price came, and then can you see somebody actually entered trade from here? Let me show you that. Somebody entered trade from here. Let me just show you that. You can see inducement here, right here. Inducement, somebody that is taking trade from that place will definitely be part of those kind of people that will get stopped out. Taking trade from here, let me be sure I show you that properly. So when you see this happen now, you're going to see that these guys, can you see, they have gotten stopped out. This liquidity that is here, they are stop losses, because if you are selling, your stop loss is actually a buy order. Okay, you're selling at this point and then you're deciding to buy at a higher price. Reached out to this particular order block before price pushed down to that area. If I want to show you more of this, let me try and show you that. Now you can see inducement happen time and again. Let me show you some type of inducement again so you can see what I'm saying. Can you see this very simple way that people can get deceived? I said inducement is basically areas that most people think is the right time to take trade and then they got stopped out. Look at this. Somebody that is here waited for this. Can you see price actually came here, even had a break of structure at this point, even had a break of structure at that point. But what happened? It was an inducement. Actually got stopped out here because you're entering trade from there. Where do you think your stop loss is going to be? Right above that place. Okay, right above this place. So you entered here, actually got stopped out with this. This is an inducement. You don't want to be part of that trade. All these areas, you can see them time and again happening. You can see price deceiving people and thinking you are in the right place. You can see this happen on your chart. So look at this. Can you see this? Price actually, this is where you can see liquidity above equal highs or relative equal highs. Actually price pushed above it and then later pushed to that area. So you want to stay out of this. Now the way I stay away from inducement, when I see equal highs beginning to form, let me see if I can see more of this as an example so I can show you exactly what I'm saying. Now you can also see them on trend line too, because they can happen around any point. I said order blocks, trend line, support and resistance. You can see them time and again. Can you see this? You can see price pushed, break structure above this place, break structure above this place, this exact place. This is where we had a break of structure. Okay, price came. Now look at this, price push and then had this liquidity residing here. People that took trade from here, okay, took trade from here, they got stopped out. All these ones are inducement. These areas is an inducement. What we call inducement, I said, is deception. It's a deception. It's not the right place to enter trade. Okay, so this is what we call an inducement. So the point of interest is basically here, and then price reached out to it before pushing up. You're going to see this time and again. This is basically how inducement operates. This is also an inducement, guys. Can you see this one? Can you see this one? Price actually took liquidity here. All these ones are inducements. Let me just properly label that. Look at this point of interest. Can you see? Price actually grab liquidity. People that bought from here are in trouble already. You bought here, you're in trouble. Bought here, you're in trouble. Price grab all the liquidity and then move up to that place. So make sure you stay away from this kind of early entry. Whenever you see price creating equal highs inside that kind of range, make sure you stay away from those kind of trades. You may end up taking trades from inducement areas. So make sure you stay away from these kind of things as you're taking your trades. So you can see all these ones, price pushed above it, grab all the liquidity here before pushing down. You're going to see this time and again. All those ones are what we call inducements, and you can even see them on trend lines. If I see any on trend line, let me show you if I have any on trend line. This one is also an inducement. Let me show you that. If you're marking out this trend line, okay, so the way I mark my trend line is basically somehow like this, something like that. Rather, I just want to be here, take trade here, take trade here, take trade here. You know, here you got taking out all the diagonal liquidity before price even came back to this place. So this is trend line. You can also see them around support and resistance. This is a support level. Can you see? Took liquidity, inducement. People that were busy buying got stopped out, induced, were deceived into buying at the wrong place. So that is basically what inducement is. So in recap, what inducement is basically a deceptive area where people take trade and then ended up getting stopped out. So stay away from inducements that you can see like that. When you see equal highs or equal lows forming and there is a point of interest, you basically should take notice of that. You see something happening like this, okay, then you become an inducement. Okay, this is the kind of things you should avoid whenever you're seeing. You can see them in both direction of the market. Okay, something like this, then it acted as an inducement. So you want to stay away from that, all this liquidity that is residing here. So what comes after an inducement is a liquidity grab. So thank you guys for watching this. If you have any question, let me know. I will answer it too. Thank you for watching. Make sure you subscribe. I have a lot of free videos for you on smart money concept. See you in the next video.